What is happening, crypto crew? Get ready for a massive download because the market is absolutely exploding with news, and you're getting the inside track right here, right now. The speed of innovation is just relentless, and if you blink, you'll miss a fortune. We've got seismic shifts, strategic masterstrokes, and debates that could redefine the very fabric of digital assets. Are you ready to dive into the updates that everyone will be talking about? Let's go. First up, a legendary Bitcoin figure is making waves with a colossal move, signaling a major bet on Ethereum's future. We're talking about a move so big, it's got everyone in the industry buzzing, a strategic pivot that could reshape the landscape. You do not want to miss the details on this one. Then, we're tracking a significant outflow from long-term Bitcoin holders, a move that's catching the eye of analysts and traders alike. What does this massive liquidation mean for the king of crypto, and what are the underlying forces driving this behavior? We're breaking it all down. But that's not all. We've got another blockbuster story featuring that same Bitcoin OG, this time explicitly abandoning gold to double down on Ethereum. This isn't just a trade. It's a declaration, a powerful statement about where this influential investor sees the future of value. And finally, we're digging into a passionate debate that could unlock a whole new era for Bitcoin. The call is to reboot its code, to unleash capabilities long thought dormant. Is this the key to making Bitcoin programmable and competitive with the hottest chains out there? We've got the full story. Stick around, because this is the kind of intel you need to stay ahead. Don't forget to smash that like button, subscribe for all the essential updates, and ring that notification bell so you never miss a beat. A legendary bet on Ethereum's future. In a move that has sent ripples through the cryptocurrency ecosystem, a prominent figure from Bitcoin's early days, often referred to as a Bitcoin OG, has executed a staggering $108 million transaction. This isn't just any trade. It's a strategic deposit into the Hyperliquid platform, a decentralized derivatives exchange renowned for its substantial liquidity and trading volume, with the explicit intention of acquiring Ethereum. This significant capital flow from Bitcoin to Ethereum underscores a growing conviction among high-net-worth individuals and potentially institutions about Ethereum's long-term potential and its expanding ecosystem. The OG's activity is reportedly part of a much larger accumulation strategy, having already amassed an impressive 837,429 ETH, a staggering sum valued at approximately $3.85 billion. This massive accumulation, coupled with the recent BTC deposit for ETH acquisition, suggests a deliberate and substantial pivot, moving significant capital away from Bitcoin and into the second-largest cryptocurrency by market capitalization. Hyperliquid has emerged as a crucial venue for these large-scale asset movements. The platform has facilitated an astonishing $2.5 trillion in derivatives volume, making it a powerhouse in the crypto trading landscape, often rivaling major centralized exchanges in terms of daily activity. The high liquidity available on Hyperliquid makes it an attractive venue for whale activity, enabling the seamless execution of large orders without significantly impacting market prices. This concentration of whale trades on Hyperliquid is closely monitored by market participants, as such movements are often seen as leading indicators of potential market shifts and price volatility. Analysts are specifically watching ETH BTC and ETH USDT trading pairs, anticipating that this whale behavior could precede notable price swings, potentially in the 5–10% range for ETH against BTC. The rationale behind this strategic shift appears to be rooted in Ethereum's ongoing development and its expanding utility. Ethereum's advancements in scalability through Layer 2 solutions, its robust smart contract capabilities, and the continued growth of its decentralized finance, DeFi ecosystem, are key attractions. This aligns with broader trends observed in institutional investment, where diversification within digital assets is becoming increasingly important. While Bitcoin has seen substantial institutional adoption, with reports indicating it holds a significant percentage of crypto allocations in institutional portfolios, the move towards Ethereum suggests a maturing crypto strategy that seeks exposure to different facets of the digital asset space. Particularly, those offering yield generation and application-specific utility. On-chain data further supports this narrative, showing a notable increase in spot ETH purchases following periods of Bitcoin liquidation, with trading volumes on platforms like Hyperliquid expected to see a considerable uptick. For the broader market, this whale activity serves as a potent signal. It suggests a potential short-term bearish pressure on Bitcoin as large holders reallocate, while simultaneously creating opportunities for long positions in Ethereum. The increased liquidity on platforms like Hyperliquid could also enhance trading dynamics, especially for those utilizing leveraged positions. Key price levels for Ethereum, such as the $2,500 support and $3,000 resistance, are being closely watched as potential indicators for future price movements. This strategic reallocation by a major Bitcoin player not only highlights individual investment conviction, but also contributes to the ongoing narrative of Ethereum, solidifying its position as a critical infrastructure for the burgeoning digital economy, potentially influencing its market cap and performance against Bitcoin. But is this the only major shift happening in the crypto world? We're about to find out as we look at what long-term Bitcoin holders are doing. Long-term holders shift gears, a $3 billion Bitcoin sell-off. In a significant development that's capturing the attention of market analysts and investors alike, long-term holders of Bitcoin have recently ramped up their selling activity, marking the largest single-day divestment seen this year. These seasoned investors, often referred to as patient holders, due to their history of holding assets for extended periods, offloaded a colossal 97,000 BTC on a single Friday. This massive liquidation event, valued at nearly $3 billion, represents a substantial portion of the recent increase in Bitcoin spending observed in the market. According to insights from blockchain analytics firm Glassnode, the 14-day moving average of coins spent by these long-term holders has surged to nearly 25,000 BTC, reaching levels not seen since the beginning of the year. This indicates a notable change in behavior from a segment of the market that has historically been a stabilizing force. Glassnode defines these long-term holders as individuals or entities who have maintained possession of their Bitcoin for over 155 days. Their decision to liquidate such a substantial amount suggests a variety of potential motivations. One prevailing theory points to investor psychology, particularly in the context of Bitcoin's price breaching the $100,000 mark. For many, reaching such a psychological and financial milestone might trigger a desire to secure profits, especially considering the relatively few assets in the global market that trade at such a high per-unit value. This profit-taking behavior is seen as a natural adjustment phase as the market acclimatizes to Bitcoin's elevated valuation, potentially leading to a period of range-bound trading as investors digest the new price levels. While this sell-off is significant, it's important to note that it remains considerably slower than the profit-taking spikes observed in late 2024, suggesting a more measured approach rather than a panicked exit. The immediate impact of this large-scale liquidation was felt in Bitcoin's price. Following the sell-off on Friday, Bitcoin experienced a notable decline, falling by over 3.7% to around $108,000. The downward trend continued into the early part of the following week, with the cryptocurrency trading lower. As of the latest data, Bitcoin was trading below $103,330, marking a significant retreat from its all-time high of over $124,429 and representing a roughly 16% drop from its peak. This price action highlights the sensitivity of the market to significant movements from long-term holders who, despite their long-term conviction, can influence short-term price dynamics when they decide to realize gains. Some market observers also suggest that a weaker U.S. jobs market might be encouraging investors to seek protection in hard assets like Bitcoin, but the simultaneous selling pressure from long-term holders is counteracting this potential upside. This trend of long-term holders selling has been consistent since Bitcoin surpassed the $100,000 threshold earlier in the year. Wallets that have remained dormant for years have begun to participate in the selling activity, indicating a potential capitulation or strategic reallocation among even the most patient investors. The market is now in a phase where it needs to absorb this supply and establish a new equilibrium. The coming weeks will be crucial in determining whether Bitcoin can consolidate above the six-figure mark, or if further price adjustments are necessary as the market adjusts to this new normal. The actions of these long-term holders are a key indicator to watch for anyone trying to navigate the current Bitcoin market. So, Bitcoin holders are moving, but what about a legendary Bitcoin figure who's making an even bolder statement? We're diving into that next. Bitcoin OG dumps gold, bets big on Ethereum's future. A prominent figure from the early days of Bitcoin, widely known as the Bitcoin OG, has executed a monumental portfolio reallocation, shifting a staggering $1.1 billion from Bitcoin to Ethereum over a 2-day period. This strategic maneuver involved selling 5,000 BTC, valued at approximately $541.2 million, and immediately acquiring 96,859 ETH, worth around $433 million, on the decentralized exchange Hyperliquid. This significant conversion follows a previous, equally substantial transaction where the same whale reportedly sold 1,000 BTC, $108.27 million, to purchase ETH, as noted on August 29, 2025. These consecutive moves represent one of the most significant Bitcoin to Ethereum capital shifts observed recently, signaling a profound strategic pivot by an investor who has been a long-term holder of Bitcoin since its inception. The Bitcoin OG's Ethereum holdings have now swelled to an impressive total exceeding 837,000 ETH, a portfolio currently valued at roughly $3.8 billion, according to on-chain data. This accumulation aligns with a broader trend identified in August 2025, where previously dormant wallets holding over $11.4 billion in Bitcoin began to actively move their assets. This suggests a wider market sentiment shift, with major early investors reevaluating their asset allocation strategies. The whale's preference for Ethereum appears to stem from its inherent utility, including its staking rewards that offer passive income and its sophisticated smart contract functionality, which enables a vast array of decentralized applications. These aspects are increasingly being favored over Bitcoin's primary narrative as a digital gold or store of value. This strategic divergence in investor focus is mirrored in recent market performance, with Ethereum notably outperforming Bitcoin during August. Ethereum experienced a significant price surge, marking a 24% gain during the month, while Bitcoin saw a downturn, dipping to around $107,700 before a slight recovery, ultimately closing August with a 5% decline. The whale's aggressive accumulation of Ethereum may also be influenced by escalating institutional interest and positive regulatory developments. For instance, the proposed U.S. Genius Act, if enacted, is anticipated to enhance Ethereum's role in critical financial infrastructure, particularly in the realms of stablecoin management and the tokenization of real-world assets, further bolstering its perceived long-term value and utility. Market analysts are interpreting the Bitcoin OG's actions as a hallmark of the crypto market's maturation. While Bitcoin continues to be recognized for its foundational role as digital gold, Ethereum is increasingly being adopted as a strategic diversification tool, offering active yield generation opportunities through staking and a dynamic ecosystem for innovation. The whale's substantial accumulation, particularly around the $2,800 support level for ETH, is expected to inject significant liquidity into the market. This could potentially amplify volatility on major exchanges and influence key trading pairs like ETH BTC and ETH USDT. If this sustained buying pressure continues, Ethereum is poised to challenge key resistance levels, potentially targeting the $3,500 to $4,000 range in the near future, which could lead to further price appreciation and solidify its market position. Now that we've seen a major shift from Bitcoin to Ethereum, what if Bitcoin itself could unlock even more potential? That's the question being asked next. Unlocking Bitcoin's potential, the push for OpCat. Bruce Liu, the founder of OPCAT Labs, is spearheading a movement to re-enable a long-disabled opcode in Bitcoin's code known as opcat, arguing that its activation is crucial for transforming Bitcoin into a truly programmable platform capable of competing with modern blockchains like Ethereum and Solana. Liu emphatically states that without opcat, Bitcoin is fundamentally limited, likening it to a jumbo jet without wings, possessing immense potential but unable to fully take flight. He asserts that re-enabling this single opcode would unlock a vast array of new functionalities, allowing developers to concatenate data within scripts. This capability would pave the way for advanced features such as enhanced security vaults, complex covenants, decentralized exchanges DEXs, and the implementation of zero-knowledge proofs, thereby elevating Bitcoin's utility far beyond simple peer-to-peer transactions. Liu emphasizes that opcat is not new code, but rather a feature that was intentionally disabled by Satoshi Nakamoto in 2010, not removed entirely. He clarifies, opcat is not my invention. It's Satoshi's code. It was never deleted, only disabled. This distinction is critical for his argument, framing the initiative not as an alteration of Bitcoin's core, but as a restoration of its originally intended capabilities. By re-enabling opcat, Liu believes Bitcoin's native script programming language would be fully realized, allowing it to support the complex operations seen on other major Layer 1 blockchains. This would enable the creation of sophisticated applications, including basic DeFi functionalities, directly on the Bitcoin blockchain, a feat currently challenging due to the opcode's disabled status. The push for opcat is not without its challenges and controversies. Satoshi Nakamoto's original decision to disable the opcode was driven by concerns that it could be exploited to facilitate denial-of-service (DoS) attacks. Opponents of re-enabling opcat argue that introducing any new opcode, even one that was previously part of the code, carries inherent risks and unknown unknowns that could compromise Bitcoin's hard-won stability and security. Furthermore, a philosophical debate exists within the community. Should Bitcoin remain primarily a digital store of value, or should it evolve to embrace greater programmability, akin to Ethereum? Liu counters these arguments by referencing Satoshi's own explanations for the inclusion of the script language. He points to Satoshi's 2010 Bitcoin Talk posts, where the creator explained that script was designed as a general solution to accommodate a wide range of future transaction types without creating endless special cases. By enabling opcat, Liu argues, they are fulfilling Satoshi's vision of a flexible and adaptable protocol. To demonstrate opcat's potential, OPCAT Labs has already launched a virtual machine fork of Bitcoin with the opcode enabled, complete with software development kits, SDKs, application programming interfaces, APIs, and a user-friendly programming language designed to attract Web2 developers. Complementing this technical effort, Liu, alongside early Bitcoin entrepreneur Mate Tokay, is spearheading an alliance of opcat proponents. This alliance aims to consolidate and coordinate the efforts of various groups, including Taproot Wizards and Starkware, who are also exploring enhanced functionalities for Bitcoin. Liu views this as a crucial step in organizing what has previously been a fragmented advocacy movement, intending to present a unified and visible front to stakeholders, fund managers, institutions, and lawmakers. The goal is to educate these influential parties about the enhanced capabilities opcat unlocks, thereby fostering greater excitement and support for Bitcoin's future potential beyond its role as digital gold. With all these major moves and potential upgrades, what's the final word on what's happening right now? Let's wrap it all up. And that's a wrap on today's explosive crypto updates. We saw a Bitcoin OG make a massive $108 million move into Ethereum, signaling a major bet on its future. Long-term Bitcoin holders executed the largest single-day sell-off of the year, moving nearly $3 billion. That same Bitcoin OG also ditched gold to pour more into Ethereum, showing a clear strategic shift. Plus, there's a movement to re-enable opcat to unlock Bitcoin's programmability, potentially changing the game. Don't miss out on any of these crucial developments. Hit that like button if you found this valuable, subscribe to Bitcoin Bulletin for your daily dose of crypto intelligence, and make sure that notification bell is on so you're always the first to know. Follow us on all social platforms to stay connected and join the conversation. We'll see you in the next one.